Good morning. This is Arlan Suderman, Chief Commodities Economist at StoneX at around 9 a.m. on this Monday, September 15th. We're halfway through the month of September. Do we have a trade agreement with China? The fourth round of talks with Chinese negotiators started yesterday, Sunday, the 14th of September in Madrid. They're scheduled to go on yet for a couple more days. They're going on again today. We saw a post on social media from President Trump this morning suggesting that perhaps there is a trade agreement, but involving TikTok. Now, could commodities be a part of it? They could, but I remain skeptical of that. TikTok has an imminent deadline. And so that's pushing the issue a little bit longer. And that seems to be how these negotiations go. And so you look at, okay, what are other imminent deadlines that are out there? And right now, the next imminent deadline that I can see is really the November 10th deadline for the end of the suspension of the really high tariffs between the United States and China. So I would anticipate as we get closer to November 10th that we will see another round of negotiations take place about extending that suspension once again. Now, what other things might be involved? The priority for the United States continues to be rare earth minerals and magnets. That is critical for development of our defense weapons and for production of our defense weapons. That's not something the president's going to talk a lot about publicly, but those rare earth minerals and magnets are a key component in producing our defense weapons. China controls 90% of the processed rare earth minerals and magnets. They're only allowing the lower grade components to now be exported that cannot be used in the production of defense weapons. And it's not just the United States, it's to much of the West that they are restricting these. And so that is an essential component of future talks that President Trump has to prioritize related to our national defense. And so as we go forward, that's certainly going to be on the agenda probably each time that they meet and that they talk. We currently have an agreement with them that goes until later this year. I believe till November is kind of the rumor in the industry. It wasn't really publicly stated. It was about a 6-month agreement signed back in May. And so at some point they'll want to extend that, and not only extend it time wise, but extend it in the quantity and the scope of the agreement as well. Now, when it comes to the commodity sector, soybeans are at the top of the list. Obviously, we are in the heart of the US's primary export season now for selling soybeans, particularly the China in past years. So far, they have no known recorded commitments of U.S. soybeans. You can look at the unknown destination sales that we have. Those are the lowest that we've seen in years. And there's many other countries who now use that designation for soybean purchases besides just China. And so we're getting pretty low overall in that. And we've already missed out on sales for their needs for September and largely for October now, which they have those needs locked in from South American supplies. As we look beyond that, they have some purchases already for November and December as well, although more purchases could be made. But there are also rumors within China that they're going to be releasing 3 to 5 million metric tons from the reserves for crushers to purchase to help them bridge the gap until the new marketing year begins. When you look at overall their reserves, according to USDA, they're about almost twice what they purchased from us last year, and they were able to get more and more from Brazil. Now, in my opinion, they don't have to. It's physically possible for them not to buy a bushel from us if they're willing to eat into the reserves. They're very insecure about chewing into the reserves historically, but they might be willing to do so if they see South America get off to a good start into their growing season and expect South America to again expand production, where we're expecting acreage to be up another couple of percent this year, further expanding their production capability. If they see problems with the South America crop, then we may see Sinograin, which is basically immune to the tariffs, come in and make some purchases. What about a big blockbuster trade agreement with China? That remains possible. More likely, we might get some incremental sales agreements that really wouldn't be the blockbuster type to change our balance sheet significantly. An incremental agreement in order to try to leverage something else, like getting a lift of the 20% fentanyl tariff or something like that. But a blockbuster deal, not likely before China hears from the US Supreme Court on the legality of President Trump's tariffs. Because if they wait a little bit longer, so to speak, they may feel like they don't have to give up anything if the tariffs are taken out of President Trump's hands. And right now, I see that as kind of a 50-50 thing, how the Supreme Court might rule on that. So I would be surprised. I would love to see a big blockbuster deal with China, but I'd be very surprised to see one before the Supreme Court rules. That ruling is expected to be in November. They will hear arguments the first week of November, and they have put that on the fast track for a decision hopefully soon after that. Uh, in the meantime, we do continue to kind of move along in a sideways trading range here for both corn and soybeans, and even wheat now just above recent lows for wheat. Corn did have a big rally following Friday's USDA crop report, which could have been construed as bearish, but I think was seen as supportive because USDA failed to lower demand estimates. In fact, they raised exports once again. You can argue the validity of that, but it's what they did. And so ending stocks stay at that 2.1 billion bushel level, despite another 1.4 million increase in planted acreage. It's the biggest disparity between USDA's June 30th acreage survey and the FSA numbers that we've seen over the last 20 years by far. And so that caught the market off guard once again, but we still closed higher. I think that's a really positive sign for corn, where global demand continues to outpace global supply, despite bin-buster crops in the United States and in Brazil. Global demand continues to grow at a very rapid pace. And so while we may have big supplies here, the world demand continues to be strong. We've taken a decade ago, we were looking at global surplus stocks of about 32% of usage. We brought that down now below 22%. Still not as tight as what we were maybe 15 years ago, but we're moving in that direction. It just means we're reducing the margin for error should there be a problem in a major producing part of the world. So with that, I think I'll call it an end to my comments, and look forward to being back with you again later this week as we continue to look at further developments in the commodity sector. And be sure to like and subscribe if you want to keep track and follow these updates from the trading floor. Thank you.